Let's analyze, earnings still trickling in, and we've got the management of Aadhar Housing joining in on the show right now. Rishi Anand, the MD and CEO, joining in on the show. Rishi, hi, morning. Great to have you today on ET Now. Rishi, you've managed to maintain that 20% AUM and PAT growth guidance despite a softer reported Q1. What gives you the confidence to reiterate this outlook?
Good morning, Aisha. As always, it's a pleasure being on your show. Yes, we have reported, to be precise, a 19% AUM growth, 19% profit growth. And like, if I were to compare, quarter one FY26 to quarter one FY27, even on disbursements, we are 19% growth, while we would have reported 3% growth because of a change in the way we acknowledge or calculate disbursements. So there has been a change mechanism in the company, which is on high governance standards. Barring that, I think, given the growth numbers that we've been guiding the market and the way it's been panning out, the way tier 2, tier 3 locations are looking very, very confident. I think that gives the organization an upside on delivery of the guided numbers of 20% AUM growth.
Rishi, you made some accounting changes as a result of which there's a change in the way disbursements have been, displayed or it's showed. What is this accounting change that you made, and when do you expect normalcy coming back to the growth or the catch up for disbursement growth?
So there is no major change in accounting standards. The way, if I can take a minute here to let you know, the way disbursements happen to consumers is when the check in the earlier avatar, when the check was handed over to the consumer, that's the day we would typically start our interest calculations. But as we go along in quarter one this time, we have moved from check handover to something called check realization, which effectively means that the day the consumer actually gets the money, that is the time we start acknowledging the interest. And typically the gap between the check handover to the consumer and the check realization is about 5 to 7 days. So as I indicated, from a governance perspective, from a perspective of keeping the customer at the forefront, I think this was desirable, and it has also been an ask of the regulator from the last couple of years.
Kind of a differential in interest you earned because of this change in accounting?
So I would say, if we were to look at it the other way around, is there a loss to the organization? I would not say yes, there is no loss. When will the catch-up happen? The catch-up has already started. The July numbers are looking, we are back to normalcy when we look at our July numbers. But is there a loss to the organization because of change in accounting system? No, it is not. Because, it's a matter of 4 to 5 working days, and at an overall annual number, there will be no loss.
This is Harsh here. Very good having you, first off. Give us a sense with regard to the provisioning and the asset quality. Is this purely seasonality and there's no concern whatsoever on the book? Just want a quick reassurance on that.
Yes, Harsh, you're right. It is more to do with seasonality. If you look at, last, I would say 3 to 4 years, the way numbers pan out on asset quality, quarter one is always slightly higher. But the reassurance here is that quarter one last year was 1.34%. And quarter one this year is 1.31%, which is a 3 bips improvement on asset quality. Not only on the NPA and GNPA numbers, but even on 1+, we've seen a 40 bips improvement. So that gives a little more confidence on the way we want to maintain our asset quality.
How confident are you of maintaining your spreads above 5.5% going forward, given the intense competition in the space?
Aisha, we've always said that we will be a company which will be upward of 5.5%, and you're right on that. As we exit quarter one, we've clocked a spread of 5.8%. Given the competitive intensity, I would say the competitive intensity is more in urban areas and less in the emerging areas. The way we are expanding our distribution network, down to the tier 4, tier 5 locations, small talukas, district centers, competition becomes scarce. That's where the balancing act helps. You do the top line business from urban locations and the bottom line business from the emerging locations. That's why, that there is this lot of confidence on, obviously, at any given point in time, maintaining a 5.5% upward.
Rishi, but what tends to happen, at least with Aadhar, is that you're levering up and therefore your margins will shrink, as a result of which you could see an ROA impact, but you've, as of now, managed it beautifully. You've kept the ROA floor at 4. As the year goes by, it keeps going up. And therefore you end up the full year between 4 and 4.5. Can you sustain that? And what will be the lever you'll use? Will it be OPEX?
So OPEX, obviously, Harsh, OPEX is the largest lever that companies like us, it's a controllable lever, with technology playing its own role, with AI playing its own role, and we've started the journey on AI as well. OPEX eventually is going to help us lever these. You're right, ROAs upward of 4% is what makes sense for an organization like us, and we've been maintaining that. We've exited even this current quarter, at 4.04. And the confidence is that we would typically end the year at about 4.4, 4.5. Last year exit was 4.4 again. So that gives you a little confidence. With lever, obviously, ROE will play its own path as we go ahead.
Interesting. Rishi, great to have you today on the show. Thank you so much for your time.